Hi traders, welcome to another episode on the trades we missed last week. So this is the first trade for Monday, which was on the 4th of August. So now we have a bullish trade right here. As you can see, this is a fair value gap at first, cited by 2 p.m. So this was the first trade for Monday. And you can see this is a fair value gap here. Price comes back to this fair value gap, taps this fair value gap here as our number one bullish trade. You can see this is a tapping into that fair value gap. Now price created a newly formed fair value gap here. This is another fair value gap here, so we can use this as our entry. So this is how it's played out on Monday. So using this one here as our entry, right, just like so, and this is how we put our long position here at the start of this order block, or we can also use this fair value gap, but using this order block will give us a larger risk. Using this order block will give us a larger risk to reward ratio. So this is how we put our stop loss right below this low and our entry here at this order block, and our take profit will be at any high. You can use this high here. So this is an immediate high we can use, giving us a risk to reward of 1.4 risk to reward ratio. And you can see how the market rallied to the upside, giving a total of 4.00 risk to reward ratio. Next, on the same Monday, we had a bearish trade. Now you can see our market tapped from a fair value gap here for our number 2 trade, and as price tapped into this fair value gap here, it's retraced to the downside, as you can see, giving us a break of market structure here, just like it did at this spot here. So we have a break of market structure to the downside and also a newly formed fair value gap. So we can as well use this order block as we have used in this first trade here. So we have a trade like so. We'll just expect the market to tap into this this order block here, and you see how the market would give us a short position right here. As market taps into this order block, we have a bearish trade. Our high as our stop loss, and this low here would be our take profit right here, giving us a 2.29 risk to reward ratio for our number 2 trade. Now moving on, would see our number 3 trade right here, also a bearish trade. Now we can see our market tapped into this fair value gap here at this spot here. Market tapped into this fair value gap and rallied to the downside, giving us a break of market structure for a bearish trade. The next one we have is a tap into a newly formed fair value gap. As you can see, there's a fair value gap here. There's a fair value gap here that price tapped into, so we can as well use this order block right here. So as price comes back to tap into this order block, we have a bearish trade. We'll put our short position just like so. This previous high would be our stop loss, and this low right here would be our take profit. This one here is giving us a risk reward of 2.03, or this low right here, this one at this very spot here. So this is giving us a 3.95 risk to reward ratio. Now you can see that after price taps into this fair value gap here, it created another fair value gap here, an order block. So we can take this one out as our trade number 3, and you can see a newly formed bearish trade here, giving us our number 4 trade. So this is a short position just like so. We'll put it here. As you can see, this is an inducement right here. Price taps into this fair value gap but fail to to go to the previous low. So we can use this as our entry here. So this high right here will be our stop loss, and this take profit right here, this previous low would be our take profit, giving us a 3.3 risk to reward ratio, as you can see, just like so. And that was our trade number 4. The next trade is our trade number 5, and this is around the corner here. We have our trade number 5 here. So we can see how price taps into this fair value gap here, and bear in mind this is on our 3-minute time frame. Price taps into this fair value gap here and rally to the upside, giving us a newly formed fair value gap and order block right here, and this is giving us a bullish trade. So we have our long position like so for our trade number 5, and this right here would be our stop loss, and this is an inducement here. So as price taps into this fair value gap, it would wait for price to take out this previous low and tap into this one here. So this is giving us a bullish trade and a 2.94 risk to reward ratio, or we can as well use this previous high right here. You can see how price rallied to the upside, tapping into our take profits, giving us a 3.56 risk to reward ratio. The next trade is our trade number 6, and our trade number 6 is right around the corner. Tapping into this fair value gap would wait for price to give us a break of market structure like so. We have a break of the previous high, and the next one in line is to look at our fair value gap right here. Now we have a fair value gap that price will tap into and would anticipate using this low right here. Why? Because this is giving us a demand area when you go to your 1-minute time frame. So you can as well use this low as your stop loss, or use this one here. So let's use this one here as price comes to confirm our entry for a bullish trade. This is a confirmation entry, and our long position would be like so, giving us our stop loss here right below this low, and our entry at this fair value gap. Our take profit would be at this previous high right here, giving us a 2.67 risk to reward ratio. So that is that for our trade number 6. The next one is our trade number 7. Let's look for our trade number 7, and our trade number 7 happened to be on Wednesday. So we have a tap into this fair value gap, and you can see we use the fair value gap and the order block right here. As price comes to tap into this fair value gap, you can see how it's used this for our fair value gap, the next fair value gap. This is a fair value gap here, so we have a break of market structure right here, and we have a fair value gap here. So we'd use this as our bullish trade. So as price comes back after breaking that fair value gap, comes back to tap into our order block right here. So this is a long position right here, and our stop loss would be right below this low. Our take profits would be at the previous high or at the previous fair value gap. You see a fair value gap here. We can use this for our take profit, 2.92 risk to reward ratio, or use this previous high, which is quite risky, but you can see how price comes back down to tap into this fair value gap here and rally to the upside, giving us a total of 4.32 risk to reward ratio. And our trade number 8 is right around the corner right here. So we have a tap into a fair value gap here. As you can see, this is a fair value gap. Price comes up, tap into this fair value gap, and created for us a break of market structure here, and also a fair value gap. So we use this fair value gap as our next entry. As you can see, this is how our entry will be using this order block. So this is our entry right here. So we would use this long position right here as price taps into our order block, piercing through our next fair value gap right here, and our take profit would be here. We can use this previous high right here as our take profits. This one here, you can use this previous high, and this is giving us a 1.55 risk to reward ratio. The next trade is our trade number 9. You can see how price rallied to the upside, giving us a 5.1 risk to reward ratio. But still, we move on to our trade number 9, and this is price tapping into this fair value gap right here. See how price quickly tapped into this fair value gap here, rallied to the upside, and also tapping into this fair value gap here. You can see how price taps into this fair value gap and created for us a break of market structure right here, and also a fair value gap here. So this fair value gap would be what we use for our entry. So this is how our trade number 9 went. So this is our entry. We can as well use this low as our stop loss, but it will be too big for our risk, and very little or very small risk to reward ratio. So you can just use this end of this fair value gap, and you can use this previous high as our take profit. So this is giving us a 2.75 risk to reward ratio for our number 9 trade. And moving on, our number 9 trade actually bettered number 10 trade. As you can see, this is a bullish zone, a demand zone. So you see how price taps into that fair value gap, which is number 9, our trade number 9 demand area here. So price comes down to tap into that fair value gap. What we would wait for is a break of market structure, and this is our trade number 10, break of market structure and a fair value gap. Now you can see this big fair value gap here. We can just go down to use the order block that has been shown here. So this is going to be our entry. So this is our long position right here. So we'd use this. So we'd use this as our entry, and this would be our take profit right here. So use this as our stop loss right here. This would be our entry at the order block here, and our stop loss and our take profits would be at the previous high here, or this one here. So giving us a risk to reward of 2.22 ratio. So that was our number 10 trade. And moving on, would go to our trade number 11, and this is last but not the least, the trade coming from this bullish fair value gap here. The next thing you see is a break of market structure and the newly formed, these are break of market structure here, and a newly formed fair value gap. So we can as well use this fair value gap as our entry, or use this order block right here. So we can as well use this fair value gap as our entry, or our order block right here. So this is using our order block, and this is giving us a bullish trade as price taps into this order block and takes it to this previous high here, giving us a 3.07 risk to reward ratio. So that was the last trade for last week. So guys, let's go back to our charts and continue with our back testing, and we'll meet on the next episode. Peace.